All right, good morning, guys. Today is July 6th, and as usual, we'll be going over analysis for US 30, gold, and EU. So US 30, I sent this analysis in the Discord today. And even yesterday, when US 30 was here, I did send, you see this arrow right here. I was expecting US 30 to retest this trend line to the downside. Now, this trend line to the downside is a static trend line. So what we know about a static trend line is that it almost always gets retested. So US 30K, and we also had this static trend line again to the upside. And you can see when US 30 went back to the upside, it retested that top of the trend line, or that top trend line exactly to the pip, and then melted back down to the downside. Now, yesterday, while doing the live session, I did analyze and I was expecting US 30 to drop down because if you remember, this is when we were doing the process of elimination. So you have a 15-minute bearish and bullish. So those two cancel out. Then you have an hourly bearish and bullish that are close to each other. And when I say they cancel out, you're looking for order blocks, opposing order blocks that cancel, that are opposite and they're next to each other. So you can see how this 15-minute bearish and bullish order blocks, they're literally like next to each other, like 50 pips apart. So that's what I mean by those would cancel out. But in the case, like for example, this four-hour bearish high and low, the next 4-hour bullish high and low is like 500 pips or 600 pips away. But so the 4-hour bearish and bullish order blocks would not, the 4-hour bearish and bullish order blocks would not cancel out. So that's why I mentioned yesterday. So if you have this indicator, the markups indicator, in case you just want to take them off the charts so as not to confuse yourself. For me, I really do not, but you know, for you guys, you can go ahead and do that. So we could come up, and we don't trade the first 10 or so minutes after market open. We just wait for the market to stabilize. So yesterday, right, I didn't mention 15-minute bearish and bullish were conflicting, or they cancel out since they're next to each other. The hourly bearish and bullish order blocks were also next to each other. So you go ahead and take those out. The 30-minute bearish and bullish were conflicting as well. So you go ahead and take those out just to reduce the noise. And then now you're left with what really matters. So what really mattered yesterday was this. Everything else was noise. So what really mattered was this one right here, this 4-hour bearish high and 4-hour bearish low, because all the other order blocks, they were conflicting with each other. So then I did mention if price got there, that would have been a perfect area to look for sells on US 30. Unfortunately, we didn't get those sells during the live session. But if you can see here, price literally retested, and this is the importance of understanding the power of order blocks. So price literally retested the 4-hour bearish high, which is this one right here, and the 4-hour bearish low, which is somewhere right there. And from then on, price literally kept dropping, and you can see it's going according to my analysis. So I expect US 30 to come to around 33,760. Now, why is my expectation 33,760? Always ask yourself, where is price going? So right now I already made money from this. So for me, I sold US 30 yesterday up here. Unfortunately, I missed this move in the morning. So I really don't want to chase this. Now, between where we are, right? Even if I turn on the other order blocks that I turned off, the hourly, so I just don't use the 5-minute order block. So by default, this is what my chart, my markups indicator has marked up. By default, that's what I have. I normally do not take them off because I'm able to filter it out mentally. So since this sell is already going, and I really don't want to FOMO into it, normally I ask myself, where is US 30 or where is this instrument headed? What do you see down here? You see a 4-hour bullish high and 4-hour bullish low and a daily bullish high. And keep in mind, we rarely encounter daily order blocks, daily bullish or bearish order blocks, right? So what this is telling you is that we have a bunch of buyers. We definitely have buyers sitting here, and we have institutions that at this point price is likely to reject from. Now, on the other hand, what do? We have the zones indicator. So the zones indicator shows you where buyers and sellers are sitting. So since we have an order block right here, a bullish order block, I would want to see a bunch of buyers that are sitting here. So if I turn on the zones indicator, you can see that we have a bunch of buyers that are concentrated here. The only red flag about a buy on US 30 at around this zone is the daily bearish high. So you can see here, the daily, we have a daily bearish high, daily bearish low. So even at this point, we might as well cross out. So this daily order blocks, unfortunately, they cross out because they are around the same area. I really don't like crossing out order blocks because some rarely will you find them together, but you know, just to help you eliminate and just see what really matters, let's turn off the daily bullish and bearish order blocks because they cancel out because they are around each other. So what are we left with? We are left with the 4-hour bearish high and low. Excuse me. So we're left with the 4-hour bearish high and low. Now, if you're going to enter a buy for US 30 at around 33,750, what you would want to look out for, right? Always consider where's your stop loss going to be. So we already know that we have a daily bullish order block right here. So let me put that back in. So you would want, where would you want your stop loss? Ideally, you would want your stop loss somewhere here. So this is a, and let me turn off the zones in the, I just don't like leaving it on the chart because just to reduce, you know, the color and eye strain. So if you're taking a buy for US 30 here, you would want your stop loss to be somewhere below this daily bearish high and also below this daily bullish low, because if US 30 breaks this daily bullish low, then we are likely to come to the daily bearish low, and then price is gonna keep sinking and sinking. Now, how many pips is that? We have 33,763 to 33,456. That is a 300 pip move. Now that's a very heavy move. That's a move you might have to hold for like 1 day or so. So nowadays my TP on US 30 and stop loss is normally like 200 pips. So for me here, if I was taking this trade, to be honest, let's see. So ideally, this is what I would like my TP and stop loss. Actually, no, not that. It should be that. Ideally, that's what I would like my TP and stop loss to be. Now, in these areas where you have these heavy order blocks, you normally expect a lot of manipulation. So in any case, I think the best buy on US 30 would be at this daily bullish low, because I do expect definitely there's going to be some quick retracement or reaction from this 4-hour bullish high and low. The only issue with that is that even with a 200 pip stop loss, you know, you can still get faked out. So for me, the best buy on US 30 would be around 33,539 area. So let's see what's around 33,539. 33,539 would be somewhere around here. So US 30 would have to drop all the way down here somewhere. Yeah, but that's my analysis for US 30. So if you're gonna buy here at around 33,760, just make sure to understand you can easily get faked out, because this right here, they have a daily bearish high and daily bullish low below your stop loss. So I think price is bound to come down there at some point. Gold, this is the trade I took yesterday on gold. And for me nowadays, right, I hold my trades, either hits TP or stop loss. That's how I trade. So I already took that trade on gold. And for gold yesterday, this is the arrow I drew and I sent it in the Discord yesterday. I expected gold to come down this way because gold rejected from this trend line to the downside. And then guess what? We have another trend line to the downside on gold from this high low to this lower low. And you can see this is a point of interest for gold as of now. So what I'll do with gold, I do expect some, and keep in mind, I think tomorrow we have what, NFP. So we might consolidate like after midday today, price might just consolidate till tomorrow. So I anticipate gold just being stuck on this trend line until NFP tomorrow. But eventually I do expect gold to go somewhere around 1890 area. But for you to sell gold, if you really want to sell gold, number one, you have to have a confluence. So for me, I'm not looking to sell gold for now. In any case, I'm waiting for, actually using the reversal indicator, we had a buy, just had a buy. But for me, I would rather wait for price to get away from this trend line. And then that way I would find something to trade for gold. EU again, EU is still consolidating. You can see EU, same thing, right? Hourly bearish order block, hourly bullish order block, that cancels out. 15-minute bearish and bullish order blocks, those cancel out. 30, at that point, you're only left with a 30-minute bearish order block, but you also have a 4-hour bullish order block that's all the way up here. So I do expect EU to shoot up to around 1.091. We also have a 4-hour bearish high and low. That's the issue with consolidating market. You'll find opposing order blocks around the same area. So again, I'm not looking to trade EU today. Yeah, so for right now, it's gold. Let me see what we can take off for gold here. So if I come in the markups, we have 15-minute. They're conflicting because they're close to each other. Then we have the 30-minute close to each other again, opposing order blocks. So take that noise out. We have the hourly bearish and bullish high. So take those out. And then let's see what we are left with. So if you take all that noise out of the conflicting order blocks, what you're left with is this 4-hour bearish high and low, which is still next to each other. So even taking off that 4-hour bearish high and low because they're close to each other, then you're left with the daily bearish high and low. So at around 1940 or 1960 area, that would be an area to sell gold. But you can see that's all the way up here, right? So that would have to be all the way up here. But what does that also correspond with? That also corresponds with this static trend line to the upside. So right now, I really wouldn't, I don't see anything on gold. So it's either it already picked up liquidity from that daily bearish high and low. So right now, gold is in a no man's land. But if it does go up, the sell area for gold is 1940, 1960 area. But if you want to catch that right to the upside, let's see if we have buyers that are sitting anywhere here. So we have buyers sitting here. We have sellers all the way up here. But a buy, so for right now, this is what I can see on gold. So if this candle closes above this trend line, you would want to wait for the next hourly candle to retest the trend line and close above it. And then at that point, you can enter gold for the right back up, and then possibly this during NFP tomorrow. So that's what I expect to happen. But this is such a huge move a day before NFP. There's really, I don't see any liquidity to pump price up. So in any case, this move up might happen tomorrow during NFP. And then after NFP, like during Asia session, the melt on gold begins. So this might be the move up today. But you would have to wait for this hourly candle to close above this trend line. And then you'd have to wait for the next hourly candle to retest the trend line and also close above. But until you have that, trading gold right now is just risky. Does anybody have any questions? Let's see. Bitcoin. So I'm still expecting Bitcoin to pump up. And this is probably going to be brought about by NFP tomorrow. So that's what I expect on Bitcoin. So US 30, another early entry for US 30 is using the reversal indicator. So for the reversal indicator, this is what I'm expecting. So I did mention all reversal entries that I take start from the 5-minute, but for US 30, we rarely get reversals on the 5-minute time frame. unless it's a day before heavy news or a day or after heavy news. And that's only like twice or thrice a month. But right, if you look at the indicator, it gives you entries regardless whether it's before heavy news or after heavy news. So what I realized when I was backtesting this, just by using the same confluences, you can get an entry on US 30 by starting on the 1 hour time frame, regardless whether it's a day before heavy news or whatnot. So right now, what I'm looking for on US 30, this is the hourly time frame. Of course, I have my manual markups, area of interest. For me, a trend on US 30 is 500 pips. So US 30 has already completed that 500 pip threshold. So what that 500 pip, the importance of this, it tells me you don't take any buys that are between your area of interest and the threshold. So for example, this buy right here was an invalid buy. This is not a buy I would have taken. So like right here with the reversal indicator, since this is US 30, breakout pips is 50. If it was an FX pair, this would be 20. Buy and sell delays, since this is a higher time frame, this is 0. If you're using this on the 5-minute and 15-minute time frame, this would be 1. The difference is that if you put 1, excuse me, you'll get an entry upon a candle has to close above or below the 9 EMA, and then another candle has to retest and close above. So that means if you put 1 right here on an hourly time frame, you would have to wait for 2 hours before you get an entry. And knowing US 30, if you put 1 here, the trade might be so far up in profit that you're ideally just chasing a buy or a sell. So right now, these are my parameters for the reversal for US 30. I'm not interested in sells for now, but you can see there was a sell up there also, based off of even the sell that I took yesterday. So I'm not interested in sells right now. I'm interested in buys for US 30. So I turn on that buy, and then I just wait for the buy signal to show up. So this might take a little while before that shows up. So that's what I'm looking for on US 30. Gold, I'm pretty sure there was a gold reversal on the 5-minute. So for gold, you can start on the gold and FX pairs, you can start on the 5-minute. So here was that. So gold, the breakout pips is similar to US 30, 50, since this is not an FX pair. And since this is the 5-minute time frame, this should be 1 in order to give you like a safer entry. So right now, that's that buy on gold. However, I'm not going to buy gold for now until we get a closure, two 1 hour candle closures above that trend line. So the best thing with the reversal indicator, it gives you an early entry. That's the best thing with it. But for right now, the only reversal I'm looking for is for US 30. And this is on the hourly time frame. This is 0 for US 30 on the 1 hour. Yeah, so that's pretty much it. So look out for buys on US 30 around 33,760 or 33,560. And gold buys, you have to wait for 2 1 hour candles to close above this trend line to the downside. Any questions from you guys?
Yeah, bro. So what's the thing? You know the trend line. You know the trend lines, right? When you draw them, of course you said from point of structure. Sorry, lower low, high low to a lower low. But
Mhm.
what's it called? You know when you yeah like you know the move when it happens after how long should you draw the trend line? Like you know right now on gold.
Mhm.
Yeah, it's just like I know how to do it. It's just hard to explain. Like you know when you do it, like how would you do it? Like every day, like yeah.
So you won't get like a trend every day, but like it's obvious, right? Right now, gold is in a down. So in short, a downtrend is uh forming lower highs, right? So a
Yeah,
downtrend would start with a higher high,
yeah,
right? So right here, I can see there's a higher high, but we don't have a lower high yet. But I anticipate this to be a lower high. So this is why I don't have a trend line here. You can still draw a trend line here, you can still draw a trend line here, but this is what I call a hanging trend line. So until a trend line has, excuse me, until a trend line has two established points of structures, that is a hanging trend line, and I never trade a hanging. You don't want to trade a hanging trend line. So this is why I didn't draw this trend line to the downside on the upside. So this is why I drew from this high low to this lower low, because these are established points. So it's as simple as that. Also,
Yeah.
if you're still having issues with it, if you the high low plus trend indicator, if you scroll all the way to the bottom, you'll see this trend channel settings. If you're in doubt, just go ahead and turn that on. It will show you the trend, right? So it can show you a trend right there, whether it's on the 5 minute. So it might not be and it for this one, it doesn't go from like lower highs and whatnot. It's a bunch of things in there. So it does not like specifically go from a high low to a lower low, but it kind of gives you the direction of this asset is trending this way for this time frame. So you can see here if you're using this, it tells you that gold was trending to the upside here. So if you know that, then you just have to find, okay, where can I find a lower low to connect to a high low to draw my trend line to the upside. And since this is the hourly time frame, it might take a while before this channel trends downwards, if you know what I mean.
Yeah.
So
So
this
you
is
know, yeah, go on.
yeah, so this is lagging. So if you're using it on the 1 hour, before it starts switching to the downside, it might be a bit too late.
Yeah. So what's it called? You know when you do when you do the low, is it the lower low? Like when you have like four, is it like lower low all the way? Like how can I say? Is it probably? I think it's vertical. You know how you've drawn these trend lines.
Mhm.
Yeah, this one here is it.
This
Nah,
one.
no, that one.
Mhm.
No, no, this one.
This one.
Yeah, that one. You
Mhm.
know that one. How do you draw that? Like, what were you seeing there?
Oh God. Just a second. What was that? Okay. Um, which one was that? Okay, for that one,
Yeah.
there, right there.
Yeah.
So even by taking this off, this is a downtrend. Like gold is trending to the downside. So
Yeah.
by drawing a trend, there's no right. I could have even drawn it this way. For me, I just don't like a trend line cutting through candles, right? I try as much as I can not for a trend line to not cut through candle. So I could have drawn it that way, and I could have drawn it this way as well. So there's really no one right way to draw a trend line. But for me, my rule of thumb, my trend lines do not, the only times my trend lines will cut through candles is in future, right? Because I don't delete my trend lines. But when I'm drawing them, I like a clean trend line. So you see like this, and if you have like a lot of points, it does not have to connect to, if you have like 5 points, it does not have to connect exactly to all 5 points. It can connect to 3 points, but just make sure you're not cutting through candles. So right, this one I could have drawn it a bunch of ways, this way as well. So you can see here, I could have even drawn it this way, from so long as you're connecting at least two. So keep in mind, right? I normally say if it's in a downtrend, right, you can start from a high low, in this case to a lower low, but right, it does not have to start even from that high low. Just make sure you're connecting points that are in the downtrend. So you can see for me, mine was from a lower low to a lower low. Not because I couldn't have drawn it from the high low. I mean, I could have easily drawn it from the high low and it's the same thing. But the key thing, you don't want your trend lines cutting. You don't want to force a trend. So that's why you can see like my trend, like this US 31, the one I drew to the top, it didn't cut through candles, right? It didn't even touch the lower high. So the other rule of thumb, right? For me, this trend line right here, it could have easily drawn it from this higher high to this lower high. But if you do it this way, you're meeting this lower high. So this is what I mean. It does not have to touch all 3 points. So in this case, when I was drawing it yesterday, I had this higher high, I had this lower high, and I had this lower high. So I could have just drawn it from this higher high to this lower high. But the reason I drew it from this higher high to this to the third to the second lower high is that this lower high means that, or actually, let me even do it better this way. I could have, instead of starting from this higher high, I could have just started at this lower high right there. Because if I drew it from this higher high to this lower high, the trend line is so far up, and I'm omitting the fact that we formed a lower high that's lower than this. So meaning that price, if I had drawn it this way, let me show you what I mean. If I drew it this way, you can see the error here because you don't want to omit these lower highs that are being created. So that's why I mean, if you have like more than two, you want to connect like, it's good if the first, the second, and the third connect, but if you can't connect the first, second, and third points, connect the first and the third point. Because here, if I just connected the first and second, you can see this lower high just came all the way here and then went back down. But you can see, because I connected the first and the third right here, literally came and retested. So this is what you want to do. Like, and you can just go ahead and back test this. You want your trend lines to be tested exactly to the pip. And that's how you get confident trading with trend lines.
So the first, second, and third isn't.
So the best case scenario, it doesn't happen every day, but sometimes you'll get first, second, third, and fourth connecting in a perfect straight line, but that doesn't happen every day. But if you have like 5 points or 3 points established and you're not getting a straight line to all of them, try connecting the first and the third, or the second and the third, or whatnot. So don't be afraid of missing. Like here, I was fine missing this second one because I just did the first and the third because I knew this was a downtrend.
Yeah.
So keep in mind, downtrends always do like lower highs, lower highs, lower highs.
Yeah.
And
with the gold, the 1893 or 92, like on Friday. Did you draw a trend line there? I think you did.
Well, I was on vacation last week, so I didn't trade. I wasn't on the charts last week. But last week I was expecting gold to go to 1900, 1905. I don't remember the reason for that was because I had this trend line right here. So I was expecting, this was it.
Why did you draw it?
It's the same thing, right?
Yeah.
Right there, high, low, lower, low. So this is one of those instances where the first, it didn't connect to the second one, but one to the third, to the fourth, to the fifth, actually one to the, because when I drew this had not come up here. So when I was drawing this, there was only 1, 2, 3, 4 points. So I drew from the 1 to the third to the fourth right there. And then I just left it. So, and here we had an inverse head and shoulders. So I was expecting gold to come and retrace the static trend line. So that's why I was expecting gold to go to 1905, 1900 area simply by this trend line right here. Now, gold did not go exactly to that static trend line just yet, and it broke out and created other trend lines even to the top.
Then eventually it did it at the end.
Or it hasn't tested this trend line yet. I'm not going to delete it because it's a it's a static trend line. So remember, static trend lines, they don't have to be retested every time, because again, if the market is too predictable, everybody can make money. So what static trend lines tell you is that, hey, this is where I'm probably headed, right? So that was the same thing with was it have I traded a trend line yesterday? Yeah, US 30 yesterday here. So when I looked at US 30, I drew this trend line from the bottom here to the top, and then I drew this arrow expecting this trend line to the bottom to be retested, because I also had other confluences. I think I had like bearish order blocks up here, and then I was like, okay, if I have a bearish order, so always ask yourself, where is an instrument likely to head? So where an instrument is likely to head is, right, you can look at a trend line, you can look at an order block, same as US 30, right? So I said I'm not chasing this sell on US, as much as I know, and I predicted US 30 will drop this way by this arrow. As much as I know this, I already made money from US 30 here. I already rode like 200 pips. I'm fine with that. And the reason I'm not chasing this is that I don't have any entry for US 30. So ask yourself, where is this instrument that I'm trading likely to head? So if you ask yourself that, you can look for where is the next trend line on the higher time frame, where is the next order block. In this case for US30, where I'm expecting US30 to head is not based off of a trend line, because I don't have any trend line on the hourly time frame, unless US30 comes all the way to 32,000. I don't have any trend line close by there, so I cannot use US30. I cannot use a trend line to predict where US30 is headed. So what I'm using to predict where US30 is headed is this 4-hour bullish order block and daily bullish high, because right now US30 was in a no man's land.
Yeah.
You see what I mean? So
Yeah.
yeah, so just use like trend lines help you identify like where to take profit or where to enter a trade or where an instrument is moving.
Yeah. And
Yeah.
with the the markups before you had the, how would you do it? I mean,
you,
you said
you said
you took a lot. The
you said
markup
uh-huh.
before you had the indicators, like
Hmm.
you said, you took you a long time to
Yeah.
mark it up every day.
Hmm.
How did you used to do it, like manually every day?
So manually every
Yeah.
day, like for example, so I would start from the daily time frame down to the 5-minute time frame. Now the daily time frame, it's not really gonna change a lot. The daily down to the 4-hour, probably not gonna change a lot in the week. So mostly the ones I had to adjust were like the 5-minute to the 1 hour or something. But anyway, so order block, what I normally look for when I was marking them up manually, I would look for a trend. So right here, I can tell US30 started a downtrend with this candle. So if it's a downtrend, I'm going to look for the previous bullish candle before the candle that started the downtrend. So in this case, I would do right here on the hourly, this right here would be my hourly bearish, hourly bullish high. And then the low of that candle, the wick, or the body, whatever, the low of that candle would be hourly bullish, hourly bullish low. And that's the same way my automated markups work. And that's it. And then, right, and the same would be true for an uptrend. If it's an uptrend, like here, to me, this candle right here would be a bullish candle. So I would, if it's an uptrend, I would look for the previous bearish candle. So that's just how, for me, I mark up order blocks. There are people who do the, there are people who do, like, if it's a downtrend, they look for the bearish candle that started the downtrend, and so on and so forth. But I would do
So
this,
yeah.
starting from uh, the monthly time frame down to the 5-minute. Now, and then, but for me here, I would not mark this up because price is so far away from this hourly bearish order block right here. So in any case, I would look for the candle that's closer to where price is. So instead of, because you can have a bunch of hourly order blocks or a bunch of 5-minute or whatnot order blocks. So like in this particular instance, instead of that, I would focus on this green candle right here. I would focus on this green candle. And this green candle would be my hourly bearish high, hourly bearish low, because that's the previous bullish candle before this downtrend began, if that makes
Mm,
sense.
yeah. So
So
don't be done. Yeah.
that's what I would do like every day. Yeah, way back
Oh,
when I didn't have automated system for that.
mm. So for the 4 hour markups, you would do that on the 4 hour chart, right?
Yeah.
Mm.
So it's the same thing and down to everything.
Oh, I see. I see.
Yeah. So gold, let's see what gold is doing. Yeah, so this is another reason why I don't trade around trend lines, because around trend lines, you're just gonna get faked out a lot. So, and I'm pretty sure tomorrow is NFP, right? If I'm not wrong. Yeah, tomorrow is NFP. Yeah. So right now, like, just expect the market to die down. So I expect gold to just range and range in this trend line until tomorrow. And based on what we identified, the sell area on gold is 1940, 1960, which is where we have the daily bearish high and daily bearish low, which also aligns with our trend lines or the trend lines that I've drawn up here. So these are the areas to sell gold. But for right now, if I get a trade to ride gold up, sure, but like right now, I really don't see anything. Let's see the breakout scanner and see if there's anything. So gold is breaking out to the downside for a sell. This breakout also would have hit TP yesterday as well, because this is one of the entries I was also using. Let's see the crosses indicator. Crosses indicator also gave a sell or has given a sell. Yeah. I really don't see any trades for today. Given tomorrow's NFP. So US 30 is what I'll be looking at here. And for me, this is just so annoying because this would have been such a good trade if we did not have this daily bearish high and low. But yeah, for me, this 33.540 is a better area to buy US 30. But if you can do it this way, this might be a possible swing trade. Like I know, like before I went on vacation, we caught like a 500 pip move, which took like 1 week to hit. But this might be, if you just want to get in and just hold for a couple of days, because the issue with using like a 200 pip stop on US 30 at around 33,760 is this daily bearish high. So because what this daily bearish high will do, it will pull liquidity down here. And it also gives market makers a chance to manipulate price. So definitely when we get here, there'll be some sort of rejection at this area. Where is that? When we get down here, there'll be some sort of rejection to the upside. The question is it strong enough to hit your 100 pips TP or 200 pips TP? That's the question you have to ask yourself. For me, given that we have this daily bearish high here, I do see them just manipulating price here, going here, manipulating lower, and then shooting it all the way up there. So you need a stop loss that's big enough. So if you can't, if you don't want to wait for here, just use a 500 pips TP and stop loss. On the other hand, you can probably do like 100 pip TP and stop loss. 100 pips TP and stop loss right here might be enough for you to hit TP before you're stopped out. So anyway, yeah, but US 30 exactly dropped from there. If you're in doubt at this area, just wait for the entry using this reversal indicator on the hourly for US 30. This, to me, this entry will be much safer and will take off all the noise, the reversal one. If I get that entry, I'll send it to the Discord, and this will be an entry. Let's see, give me 1 second. Let me see what we have on the crosses indicator for US 30. And I normally tell you guys, don't sleep on this crosses indicator. It has literally 90 to 98% win rate right here. And I normally say, right, first 3 to 4 trades, including the original cross, are highly probable. 1, 2, 3, 4. Even though the fifth one would have still hit TP, like it's not, I wouldn't have been chasing the fifth trade, right? You've already made your profit. And this is the indicator I say you can easily pass your challenges by using, and this is the indicator I use like 1% risk. So right now, and this is why I'm waiting for buys on US 30. When we now get the golden cross back above for US 30, I just do the same thing, first 3 to 4 trades, and that's it. So right now for US 30, I'll be watching the crosses indicator, and I'll be watching also the breakout. What's that? Where's that breakout? Let me see how the US 30 is looking on the breakout scanner. Yeah, also a breakout buy for US 30. So I'll be watching the breakout scanner for a buy on US 30. I'll be watching the crosses indicator for a buy on US 30 because we've already reached our threshold. And you can see if you're just following this, the first 3 to 4 trades, you'd have 100% win rate using the crosses indicator, like if you took the sells. So I'll be watching for a buy, the golden cross on the crosses indicator. I'll be watching for a buy using the breakout scanner. And then I'll be watching for a buy on the reversal indicator. So that will help you, because right here, I just see this would be perfect. The only red flag right here is this daily bearish high and low, which is also somewhere down here. So since I see a red flag here, I just say I'll be patient and wait for my top performing indicators to give me the perfect entry. And then at that point, I just go ahead and enter without any stress. So that's how I'll approach US 30. So gold, I don't see, yeah, gold is still a bit wonky for me, but yeah, that's pretty much my analysis for today. Any last questions from anyone? All right, perfect. The last thing that I want to mention, so just remember, Fridays, this is the best time, like during Thursday mid-morning to mid-afternoon is the best time to look for a trade for Friday. What I mean by that is Fridays are normally either reversal days or continuation days. So you can literally catch a snipe trade like right now and ride it into profit between today and tomorrow. So that's what you want to look out for, because you really don't want to be entering a trade on Friday because the market also dies down at some point. So the best time to look for a trade for Friday is like right now, between right now and tomorrow. And especially now we have NFP tomorrow. Now is a good time to enter or to find a trade such that when NFP happens, your trade will mostly just go straight into profit. Yeah, but start looking for Friday entries like on Thursday mid-morning to late afternoon, and just say, okay, I know Friday is normally continuation or reversal. So try and find what instrument do you see is ripe for reversal, or what instrument do you see is ripe for continuation. And you just go ahead and enter that on, between now and mid-afternoon, and then you just go ahead and enjoy the rest of your week. Any last questions from anyone? Okay. All right. I will talk to you guys tomorrow. Trade safe. Once I get that entry on US 30, I'll send it in the group. All right. Bye, guys.